Tesla will dominate S&P 500 by 2030. May 4, 2022. After entering the S&P 500 in 2020, Tesla has continued to rapidly grow. And a new report shows that the automaker could be poised to dominate the rest of the index by the end of the decade. Especially with the company's position amidst a burgeoning EV and autonomous driving industry. Tesla may be severely undervalued, even with shares floating around $1,000 per share. According to a report written by Worm Capital researcher Cameron Tierney and partner Eric Markowitz recently reported by Fast Company. In the report, Tierney and Markowitz posit that Tesla's competitive edge coming from advances in artificial intelligence make it a serious contender and likely to dominate the S&P 500 by 2030. The report encapsulates a multi-year study conducted by the firm of Tesla's various business sectors, including its cars, EV batteries, trucking, AI and more, all of which have been built up as a result of the ever-expanding EV automaker. What it found was that Tesla has uniquely sought to control its own destiny, building and reinventing its own components, tools and factories for its needs. The result has sparked a movement towards EVs by the auto industry at large. As the International Energy Agency reported, EV sales more than doubling in 2021 to a total of 6.6 million worldwide. Now, the agency reports that EVs represent nearly 9% of the global car market, tripling in its market share from just a few years earlier. By 2030, the Edison Electric Institute predicts the US will see around 22 million EVs on the road. As another example of the growing field, source reposted and summarized from Zachary Visconti at Evanex. My take: this I can get behind. In 10 years everyone will be crying about how cheap the stock was in 2022. Tesla plans to double Giga Shanghai output. May 4, 2022. Tesla is planning to double Gigafactory Shanghai's production capacity by adding a new building that could supplement the Chinese factory with 450,000 additional vehicle builds every year. A letter from Tesla, which provided details regarding the automaker's process of reopening the factory following a 3-week closure due to a COVID-19 outbreak, detailed the plans. Tesla wants to expand the plant's manufacturing output by building a new plant on another piece of land near the Gigafactory Shanghai campus. According to Reuters, the new facility would effectively double the production output of the Shanghai plant, which produced 484,100 vehicles in 2021. This accounted for 51.7% of Tesla's total deliveries last year, outpacing the Fremont factory, which is reportedly operating at as much as 20% above capacity. The plans would make Gigafactory Shanghai the world's largest vehicle export hub, as Tesla utilized the factory to keep up with demand for the company's cars in Europe. Before Tesla's Gigafactory Berlin was given the green light to begin production and deliveries, Tesla was shipping Model 3 and Model Y vehicles built in Shanghai to Europe as bureaucratic red tape kept the European plant from beginning deliveries and production. Source reposted and summarized from Joey Klender at Tesla RT. My take: wow, it will be built very quickly as well without any unnecessary red tape to slow it down. Prices for a used Tesla are wild right now. May 4, 2022. The past year has been a wild ride for Tesla pricing. For new models, there has been a lot of coverage about the price increases happening overnight. Sometimes these price changes are in response to understandable real-world effects, such as the increasing price of aluminum and nickel. Sometimes they are seemingly random. Used Tesla prices have been equally wild and often even more random. Since Recurrent started tracking used prices in April 2021, the valuations of the used Tesla models tended to follow price increases for new models. As demand for less expensive, gently used vehicles grew, the long wait time for a new Tesla also pushed new car shoppers to the used market. The chart below tracks price changes in select new and used Teslas over the last 9 months of 2021. Notice that the price increases are much higher for the Model S than the Model 3. Even on a percentage basis, we saw a 25% increase for Model 3 compared to a 30% increase for Model S in the first quarter of 2022. A slight multi-month drop in used prices suggested that they had finally hit their peak around New Year's. But once spring hit, used Tesla prices started to rise again. This time, buoyed by unprecedented interest in EVs as gas prices soared and as major car manufacturers threw their weight behind electrification. Used Tesla prices are back up around their December values, which are 10–20% higher than they were a year ago. While these are major increases, they are still much lower than the new price increases. Even in this crazy market, used cars are more resilient to short-term fluctuations than new ones. Source reposted and summarized from Scott Case at Inside EVS. My take: it's an amazing time with used car prices right now. I think it will be short-lived though. How will another Tesla stock split affect retail investors? May 4, 2022. As Tesla prepares for another stock split, analysts are pondering what to expect from retail investors. At the same time, many retail investors are also wondering if it's worth upping their portion of the automaker's shares before the stock split. Tesla's impressive first-quarter earnings and overall valuation could trigger another surge in retail investors ahead of an upcoming stock split. According to the Motley Fool, Tesla's growth compared to auto industry standards has the automaker valued at around 4.4 times the market capitalizations of General Motors, Ford and Volkswagen combined. And it's growing still. In its first-quarter earnings results, Tesla posted $16.86 billion in revenue, representing an 87% increase year-over-year. Net operations cash flow surged by 143% to almost $4 billion. And the automaker produced 305,407 vehicles and delivered 310,048 total, with these figures jumping by around 69% and 68%, respectively. Last month, Tesla shared a question forum for investors to ask and vote on questions prior to the Q1 earnings call using the platform Say Technologies. And the top question was regarding the stock split with 6,900 upvotes. It isn't yet clear at what ratio a stock split would occur, though it was one of many questions left unanswered on the forum. Tesla filed an 8-K with the Securities and Exchange Commission in late March, and it said it would likely seek shareholder approval to increase the authorized share capital to make room for an upcoming stock split, as reported by Benzinga ahead of the company's Q1 earnings call. Source reposted and summarized from Zachary Visconti at Evanex. My take: the stock split will be 20 to 1. It will be a crazy time between August 4 and the split date.